Yeah. Mike, let's get your take on where you think sentiment is right now. I saw you writing a little bit yesterday about the fear and greed indices, pointing a little bit more to the greed.
Yeah, no doubt about it. I mean, there's definitely a belief phase in this rally that's probably started. This comeback from March 8 months ago mostly has fed on disbelief. And I think that between the seasonal forces being strong and this sense out there that we see a little bit of a clearance toward this, post-COVID moment with the vaccines, it all did come together. Also, though, with the grab for cyclicals, laggards, anything that moves fast, anything that seems like it was really dented up by this whole phase. Now, sentiment, it's not a moment in time where people say, oh, you're all too bullish and now it has to stop. But there's no doubt about it that people are starting to feel it. And you're starting to see things like, the percentage of stocks that are, in a massive uptrend is the highest in 7 years. So it's been a broad rally, but it's one that now people are buying into. What's funny, though, Carl, is you say, I do cite the fact that fear greed index was 87, 88. But the number of people who respond affirmatively in agreement with the idea that everybody else is too bullish is also tremendous, right? So there's still this sense out there of nobody's over the idea that there's a disconnect, a perceived disconnect between what's happening in the markets and the rest of the world. So I don't know that you can sort of say, well, that was fun, it's over. It's much more about one of the headwinds this market has to chew through if it's going to make further progress. The S&P, we didn't talk about it. S&P 3635 doesn't have quite the same ring as Dow 30,000, but that was a record yesterday, but only by a few points, right? We were still kind of noodling around these levels that we first hit briefly on November 9th when we got that Pfizer news on the vaccine.
Mike, we've talked sorry, Carl. Mike, we've talked about this for many months, this entrance of a relatively new cohort into the marketplace that seems to enjoy sort of speculation to some extent. Talking about individual traders using these new platforms, some of them or older platforms, but to be very active. I don't know what you hear or what you see or what you expect. I don't even know if you've noticed at about 4:30 in the morning, some of these people seem to get started. And you start to see moves in stocks in these early trades, whether it's Palantir or Carnival Cruise Lines or Tesla. But they're here, and they don't seem to be going away.
No, and because they've gotten positive reinforcement largely, I think if you start on the premise that, this is kind of play money, it's a little bit of a video game. And I don't mean to belittle it. It's obviously, it's numbers on a screen and lines on a screen, and you're playing them and you're rooting for one direction and you're thinking you have skill at it. And that's what it is. But there's a new energy in the market for that. And there's an emotional sense that it's not just disciplined algorithms that know what the right sell levels are, that are going to play mean reversion, that are going to sort of keep things within the bands. And so there are these sections of the market like EVs, like anything related to crypto, like cannabis, and by the way, like old energy right now, which is flying because it's all beaten down on low price and high beta. So yeah, it's in there. I don't think that, again, that's how bull markets act on some level. Yep. So it's one of those things where you sort of welcome it and fear it at the same time, Carl.
Shepard Smith here. Thanks for watching CNBC on YouTube.